So welcome guys. I just wanted to do a quick review of price action. So I want to show an X-ray view of this section of price action. From this top to this bottom, we will see how price has reacted to different levels, which I mentioned in my previous video of scalping secrets. So to just establish the context, this is the 1 minute chart, this is a 15-second chart, and this is a 5-second chart. Okay, and this is a small screenshot of a weekly chart on NASDAQ. You can see this is the premium wick I plotted, all the quadrant levels, 4 quadrant levels on this premium wick. So if you observe, this is the midpoint of this premium wick, this is the lower quadrant 25% level, and this gray line, you can see here I plotted this gray line, which is nothing but low of this quadrant of this wick. So this is the low, this is the 25% level blue line, and this red line is the 50% level. So you can see when price retraced into this, price went from discount to the premium, you can see this reaction from this volume imbalance. At the same time, we have this bearish fair value gap. So price went there and rejected from there and closed below this bearish fair value gap. So I want to establish the context. So I have established the context. So now I want to see whenever price is coming into the premium levels, we want to see a rejection or a shift in market structure from the premium. So how do you confirm that shift in market structure? So on a 15-second chart, you can see this series of up close candles. This candle with the wick pierced this opening price. So this is the indication that we have a shift in market structure, and you can see this bearish fair value gap I have extended. The bodies of the candle, you can see once we closed below 50% of this bearish fair value gap, the bodies of the candle never went above 50% of this bearish fair value gap. See, so once we pierce the opening of this series of up close candles, we have a confirmation that we have shift in market structure. Or if you go to the 5-second chart, once this swing low was taken out here, we can confirm that we have shift in market structure. So on the next candle, you can see the wick just went up and started breaking down. Even on a 5-second chart, you can see the bodies of the candle never went above this bearish fair value gap and started breaking down. So you could have entered on this candle. So once we closed below this balanced price range and we closed below this swing low, you could have entered on this candle. So we could have entered short position on this candle, and your stop loss would be above this midpoint of this bearish fair value gap, and your target would be these equal lows, guys. This swing low, this swing low, this swing low, all are relatively equal. So this would have been your target. So now we will go deep into the X-ray view of the price action, how price is behaving. So again, to establish the context, this gray zone is a new day opening gap. This gray zone is new day opening gap. This is a new day opening gap. Again, this gray zone is a new day opening gap. So when price closed below this new day opening gap, so this will become a premium array. So whenever price closes below a premium array, discount array, this was when price was above this new day opening gap, this was the discount. So once we closed below this premium discount array, it will act as premium array. So the premium arrays, PD arrays, price should not go above 50% of this premium array with the body. Again, if you look to the left side, we have these wicks. So price closed with the body below this. When price was somewhere here, this wick was a discount wick. So when price closed below this discount wick, what will happen? This wick will act as a premium array. So now I'll plot the 4 quadrant levels on this wick, on this premium wick, because price closed below this wick. So now this will act as a premium array. So if you can see, price came down, came into this, again new day opening gap. Again we have one more wick here. This wick is a discount wick now. Since we did not close below 50% of this wick, so price came into this new day opening gap, this gray zone, and price did not close below 50% of this wick. Again on the next candle you can see price went below. Again we have one more discount wick here. I'll plot this quadrants on this wick. See, price came back but never closed with the body below 50% of this wick. So again price has respected this wick. The body is closed above this. So price went back into premium array. What is the premium array? We have this new day opening gap and we have this premium wick. So you can see clearly price went back up into this premium wick. You can see price touched the 50% level of this wick and the bodies never closed above 50% of this wick, and we had a rejection. So price again came back. Price again after rejection from this midpoint of this came back, but still did not close below 50% of this wick. See, the bodies of the candle still did not close below 50% of the wick. So again this candle, I'll just zoom in. You can see this candle again went into this lower low of this wick, again started rejecting, and then we had this wick. So I'll just delete this. You can see again this wick, specifically this wick, it came into this gray line. This gray line is nothing but the lower quadrant of the weekly premium wick. Okay, so this went into this low of this premium wick. So again we had a rejection, but now this time it closed below this discount wick 50% level. So when we had a closure with this candle below this, so again you can observe the same thing on a 5-second chart also. You can see the first reaction, price came back into this 50% of this premium wick and rejected. When again price came back up, this wick will become a premium wick. So we have multiple PD arrays here. This is a premium wick, this is a premium wick, and this new day opening gap is a premium PD array. So when price again came back, I'll plot quadrants on this wick. So you can see again when price came back, so price again respected the 50% of this wick and we had an expansion. This is the 15-second chart. You can see when price again, once this candle rejected from this wick and closes below this discount wick and closes below this new day opening gap. Again, there is one more new day opening gap and this is first presented fair value gap. So price again came back into this discount array, again went back up. See, when price again wicked into this new day opening gap, sorry, first presented fair value gap, and again came back, you can see the bodies of the candle never closed above this first presented fair value gap. The bodies of the candle are remaining inside this. So that is the reason, guys, I have multiple time frame charts on my setup layout. On my layout, this is 1 minute, this is 15 second, again 5 second. This fair value gap is not visible on 1 minute chart and 5 second chart, whereas it is visible on a 15 second chart. So that is the reason I plot these first presented fair value gaps on multiple time frames, because you don't know on which time frame you will get the reaction. So that is the reason I plot these on multiple time frames. So now again we had this rejection, price came back into this CB, first presented fair value gap. The bodies of the candle again never went above this, so so this is a good sign. Now I'll show you one more thing. So again, this discount, this wick, when this candle closed below this will become a premium wick. So again, when price will come back, the bodies of the candles should never close above 50% of the premium array, which is nothing but this premium wick. You can see the bodies of the candle respecting, and the bodies of the candle are staying below 50% of this premium wick. So that is the signatures we should be looking into the price action, guys. So that is the reason I always tell you, plot all the proximity, what do you say, wicks or fair value gaps or whatever it may be, which are in proximity to your current price action. So for example, say suppose price came down, again price was going up. So what are the nearest PD arrays for me in the premium? This is the new day opening gap, and this is the premium wick. So when price is coming back up again, what I'll be looking is, this is a bearish order block. I want to see the candles should not close above 50% of this bearish order block. Price should not close above this new day opening gap, and price should not close with the bodies above 50% of this wick. See, when price came back, the bodies of the candles were respecting. So as soon as you observe this in this 1 minute chart, as soon as you observe this bodies of the candle respecting this first presented fair value gap on a 15-second chart, so what you could have done is immediately on a 5-second chart, you can see this candle closed below this low of this wick. So on the next candle, again you could have gone short. So now again this is the 5-second chart, guys. This is the 5-second chart. So when price rejected from the 50% of this wick, and we started expanding. So this wick, initially when price was here, this wick was a discount wick. So when this candle closes below this premium wick, what will happen? This discount wick, it will act as premium wick. See? So now I'm plotting quadrant levels on this wick. So price, when again coming back, it should never cross 50% of this wick with the body. So when see again rejection from the midpoint level, guys. Price is like rejecting from this. Next. Okay. So this was the premium wick. We started rejecting again from this. So again you can see price came back into this first presented fair value gap on a 15-second chart. Here the bodies of the candle never closed above 50%. Only wicks went above this. So wicks are allowed to poke above 50% level or even above this entire fair value gap. Again the same logic, guys. So this wick, when it was up here, when the price was here, this wick was a discount wick. So when price closed below this wick should act as a premium wick. So in that case, the bodies of the candle should never go above 50% of this wick. Or you can plot even on this wick also. This is also premium wick because we closed below this. So bodies of the candle should never go above 50% of this. So to summarize things, it is very simple, guys. So when price is coming into the premium, we want to see some kind of rejection from the premium arrays. So what are the premium arrays here? We have this bearish fair value gap. We have this volume imbalance. And you can see the rejection. So whenever the price is going into the premium, we want to see a shift in market structure. So that that shift in market structure I will be observing on the lower time frames. See, when price rejected from this on a 15-second chart, you can see this bullish fair value gap was engulfed with this bearish fair value gap. So we had a immediate, what do you say, balanced price range. Sorry, it should be plotted with the rectangle, right? Yeah. So when price immediately closed below this bullish fair value gap, we had a balanced price range, and we want to see price remain below this. At the same time, we have this bearish fair value gap. So we want to see price close below this. So you can see on a lower time frame, the bodies of the candle never went above 50% of this bearish fair value gap. And then again we closed below this new day opening gap. This will become a premium array. We closed below this wick. This wick will become a premium array. So plot your quadrant levels on this wick, and the bodies of the candle should never go above 50%. See the reaction from here, 50%. Now again we closed below this. This wick should act as a premium array. So the logic is simple, guys. I think now by this time you understood like how I'm thinking about price, and how it is very simple. As long as price is above this wicks, these will act as a discount wicks. Once price closes below this wicks, it will become a premium array. That's it. And you plot all your new day opening gaps, these quadrant levels. See, for example, today's price action is here. So which is in proximity to this today's price action? This premium wick on a weekly chart. So that is what I mean proximity. So wherever price action is there, you plot all your premium or discount wicks to that current price action levels, where the current price action is going on. So that is the reason you can see this rejection on a 5-second chart or 15-second chart. The bodies of the candle never went above this lower this gray color, which is low of this weekly wick. Again you plot all your fair value gaps, first presented fair value gaps on 1 minute time frame. This is 15-second chart and even 5-second chart. See, for example, this price action. Okay. So that's it, guys. I think you got my point, what I'm trying to tell. So whenever price is coming into discount or premium, you look for what are the arrays here. See, for example, this reaction from this CB, which is one of the first presented fair value gap, and see the reaction from this. So if you plot quadrant levels on this wick again, see once price rejected from this first presented fair value gap, again the bodies of the candle never went below 50% of this wick. So then again what you will do is you will look for shift in market structure on lower time frames. Say for example this 15-second chart. So you have this swing high. So price went above this swing high, and the bodies of the candle are inside this first presented fair value gap, and again you had an expansion. Again price went above this swing high. So we have a bullish fair value gap. You could have entered long here, and you could have exited your trade inside this bearish fair value gap. So from here to here you could have taken a trade in this bullish fair value gap, and your stop loss would be below this candle, and your take profit will be inside this imbalance, this bearish fair value gap. So this could have been one trade. So that's it, guys. It is this is how I trade. This is how I scalp on lower time frames. I just plot all these quadrant levels which are in proximity. I plot all my new day opening gaps and new week opening gaps and first presented fair value gaps on all time frames, and then I look for reaction from these levels. So that's it, guys. So this is an X-ray view of price action.